Hey,
Can you hear me, Kyle?
yeah, can you hear me? No?
Can you hear me? Okay, no worries. Just want to make sure. Hopefully the tropical storm Zeta isn't going to take you guys out today.
Yeah, hopefully.
All right. Nice iPad.
Also, can you hear us?
All right, I see you guys. How is it going?
Doing good. Can you hear us though?
I don't hear anything, but maybe that's on my end. Hold on. That was on my end. I had the computer muted again.
So you can hear us?
I can hear you guys now. Yep. I had the computer muted. So do you guys have any questions with anything that has come up so far?
I don't. I usually ask them at the time. I don't right now.
Okay, just want to let you guys have the floor if you have any questions. As you can tell, we've really been layering it. So starting out with the real basics, now we went into the candlesticks. We're going to go further into the patterns recognition, and then just repeating and seeing these time and time again, so that you know what will likely happen when you see this setup. All right. As always, the legal disclaimer, the presentation is for educational purposes. Ideas are best assessed before using them. I always recommend paper trading. I know you guys are paper trading, so that's great. Once you do move over into real money, that there are varying degrees of risk with all trading instruments. And no past performance is indicative of future performance. All right, moving forward. So trading technically is all about reading the patterns of the charts and following the prints and the volume. So once you guys know all about the dark pool prints, you've already seen some of them, especially during my midday streams. When you follow them, you tend to have higher success rates. We saw roughly 225,000 prints on Amazon, over $500 million worth of a position. So when we see the direction that they're going, we can profit with them. And also seeing the patterns and knowing the patterns technically can really help you. So it's learning the patterns, recognizing them, and then trading with those patterns with success, and rinse and repeat from there. So the first one we have will be the pennant, right? So we're continuing, it's a continuous pattern. So we're heading up here, and then, sellers take over, bring it down. It finds a support area, and the buyers step in. So it starts to set, that's our new low that we have to follow. Then it goes up, we set a lower high, and then a higher low, and finally we have the breakout. Many times you'll see that this will continue in that same direction. This is simply a consolidation, and it's almost like physics. It's getting narrower, the pressure will increase. So it's like a giant pipe, right? Really big pipes have low pressure, and then you consolidate it and make it smaller. There's higher pressure going through that smaller pipe, so it would actually have a higher chance of breaking. Same scenario with the stocks. If you have RSI or anything like that, and it gets down into that narrow channel, or simply on the candlesticks, then as it comes to a breaking point, Wherever it breaks with volume, that's where it's going to go. And with the pennant, a flag, it will typically continue in that same direction for the day. There's an example here with Bank of America, right? So it was right here, and we started setting lows, finally broke out, we had volume, and it continued up to the upside. This is a 5-minute chart, and this is just a prior day, just for an example. Next, we have the cup and handle, right? So this is one you guys have probably heard about, seen it as well. And it will be typically a consolidation period where you have a round bottom, and then you have that handle formation that will happen. Now, this could be on a smaller time frame, or it could be on a larger time frame, on a daily chart, or even a weekly chart. It could go from 7 weeks to 65 weeks. It depends on how long it will take for that chart to really set up the pattern for you. And when you have the pattern, you have the rim right here, right? And you don't want the handle to be more than 50%. So if it drops down below 50%, it's no longer really a cup and handle, right? It's just sort of indecision. It might set a higher low with support, but it's not really a cup and handle breakout or setup at that point in time. And you are able to figure out the rough target based on the depth of the cup. So you have your rim here, and you have the base of the cup down here. Oops, a little bit lower. And this would be the potential move that you might see with the breakout. All right, so we measure it, we'll call this maybe 10 points just for fun. And then we have our little downward channel for the handle. Once it breaks out, this is the point at which we would add as a rough target the 10 points from right there. So you can see right off the bat, when you get into a trade, all right, hey, I can get in right here, and I'm going to set my stop down below this low down here, because likely we're going to have the volume that will press it up, and it will continue that motion. The same time we're squeezing shorts, more people see this pattern, it becomes almost a self-fulfilling prophecy, right? And then the target mathematically tends to be the depth of the cup added to the handle. Does that make sense to you guys? You're looking at it intently. All right, so we have an example of XRT. So XRT has been one that's had a crazy short squeeze, but we have the cup right here, right? And then we have, actually I drew it over a little too far, but you guys know what I'm talking about. And so we'll say this line is, let's see, what's the price there? It's 34.69. Excuse me, 39.97. So 39.97 down here. And our rim is up here at 44.57. So we'll call it $4.50. So at this point right here, up above, we add the 450 for our potential target. All right, so if it goes from, okay, so this is 44.57, we pull it back maybe 25 cents, say 44.25. So 44.25, we're going to be looking at 48.75 as our target. Does that make sense to you guys?
Yep.
It could continue further. There's nothing to say that it will not continue further. And in fact, I think XRT is up in the 50s now, 52.85. When we look at it on a weekly chart as well, I'm just going to pull it up for you guys over here. All right, so that was right here. that we had that cup. It was sort of an odd cup, dribbled a little bit, spilled here, and then came up. We have our handle 48.75. Well, it hit almost 50, and then it pulled back a little bit, that round number as well. And you can see this is one that's had quite a deep cup and another handle right here. So you can see it on a bigger time frame even. What were you saying?
Yeah, good. That's a good setup. Yeah, that's a nice one right there.
Yeah, exactly. So I saw this, and also you guys know I tracked the short volume up. They started shorting it back here. And shorts. I see they shaking your head. They were shorting it back here, and well, they were kind of off. It went up to 55.24, and they started shorting it and adding 70%. There was roughly 70%, 80%, 70%, 80% every day of the volume, and it took it all the way up to $55. Now, logically in your brain, you would also think, hey, retail, brick and mortar stores are going bankrupt, some of them. So I need to short this if you're thinking about it. But reality is the chart is uber bullish and they kept getting squeezed. So I feel bad for those shorts that got in here. And we can see you saw it on the daily. Here it is as well on a weekly chart. Right? We have our deep cup handle, right? And our depth, this is another reason why I like TradingView, roughly 18 points. So start a fresh one. We have our breakout over here. Let's go up 18 points. Hold on. So we're looking at roughly $60, more or less, for the target from the breakout over here at $41, $42. So that's how you can calculate, and you can see for a longer term trade, all right, great. Well, that's 42%. That's not too shabby, right? If you start seeing these patterns, you start holding it. Well, this has now been 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks that it took it to move 28%. And of course, if you also had options, which we're going to touch on very shortly, you can roll your options. So you're keeping risk mitigated. And we'll talk about that when we get into options so that you can say, all right, well, I see that it's setting up. Maybe what I'm going to do is it's broken out here at 41.58. I might buy a 45 call for 3 weeks out. And then in a week, all right, I've made money. I'm going to roll it out further so that you're taking your risk off of the table. You see the setup, and the icing on the cake is maybe at the same time, right here, maybe we get a dark pool print. And then this might be 2 million. And guess what? Did it go down? No, it went up. So that means they were buying. So then you continue riding it with them until maybe you see, oh, up here, oh, okay, maybe we had more prints. All right, less risk on the table. Maybe they're changing their directions. They may be adding at the same time. And we'll get into the prints too. We'll add that in onto your knowledge soon. All right, let's go back to the presentation. So next up is the ascending triangle. This is something you might see many times. We actually see it on the SPY, and it's kind of like a pennant, but the big difference is we have a flat support. It's not a descending support line or more of a trend line. It will be a flat resistance for us. So the buyers bring it up and we hit a resistance. Maybe this is, for the argument's sake of using XRT, this is $50. And then it comes back down to $48. And then it goes up to 50 again, and then it comes back down to $49. And whoops. Then we go up to 50 again. Well, look, it's the first test. No, there were still sellers. Second test, all right, there were still sellers. There's still people that wanted to sell it there. Guess what? There were actually more buyers at $50 this time than before. All of a sudden, people are interested in buying it at $50. With volume, it takes it through and it continues up until we have another resistance up here. Maybe it sets up again, same scenario, up at $55. All right, so you will start to see these patterns. I'm sure you guys are starting to really recognize them now as well in all the charts that you're watching. And you will see, all right, hey, look, first test. Nope, you don't want to go on that first test. You want to make sure that it proves itself, at least a second test right here. It needs to prove that it can break through that high. Because if not, it could simply end up being a double top. And the sellers say, you know what? Perfect. Second time at 50, I'm adding more to my position. And then it's going to come down to the downside. All right. You have any questions, guys?
How about that? I kind of do it on that. Like, you know, you can try it. Take it down, pin it, bull flag.
I'm sorry, I didn't hear you.
I said I kind of do that sometimes right now as far as like making a pennant, like the bull flag.
Yep. Do you actually draw it on the charts?
Yep.
Yep, nice. Awesome. Okay, so here's an example with the SPY. It's kind of hard to see with the moving averages, but you can see that here we had selling wicks. I'm over on the wrong screen. Here we had selling wicks right here. Here's another selling wick, another selling wick. And at the same time, we started to have a buying wick right here. More buying, more buying. Hey, guess what? Finally, it breaks through right here. And look, more volume comes in at the same time. And off we go, up to new highs. And then we hit a round dollar right up here. We'll also talk about the Camarillas and the pivots and persons pivots and how you guys can utilize those as well. So you want to have that confirmation. Obviously, this, if we'd done a channel like this, it did break out technically right here. We had a little bit more volume, but we had the highest volume right here and the move that followed it. And many times you'll see that something like this might happen, that we'll have crazy volume the first 15 minutes. It's going to drop off, right? We talked about that before with the day trading versus swing trading. And then you likely have already seen it. 10 o'clock, big volume. Sometimes it'll be a reversal. 10:30, big volume. Sometimes it'll be a reversal. Sometimes the algorithms are set up to trade on 30-minute intervals. And a lot of times you will see that at 11 o'clock, maybe the next day, this went down. And that 11 o'clock, 10:45, 11 o'clock could be that sweet spot for really a prime entry for the next bigger move. So you have your initial day trading move right here from maybe 9:45, 9:50 until 10 o'clock, 10:30, 10:45. And then you might have a secondary move that would be a bigger move going into the next day. All right, so we also have the descending triangle. So much like the ascending triangle, we have the support level. And maybe this is that $50 mark as support. And it's had earnings, like example of Intel recently, right? So Intel came down, found support. Buyers said, oh, you know what? I'm ready to buy it at $50. And then brings it up. Nope, the sellers sell it off at 52. And then they bring it back down. Nope, more buyers come in. and then 51. This could also be potentially a lower risk short right here, because then you use your 51 as your stop. Excuse me, 52 as your stop. Does that make sense to you guys? Because it's rejecting as it's coming down, it's following this trend and it's rejecting it. You might have another point at which you could draw the trend line up here that it rejected at pre-market. And finally, it comes down to 50. You might even add when it breaks down below 50. We'll talk about that too. When you're in a trade, go ahead.
You said add to your short position?
Yeah, you can add to your short position. If the trade is going your way, here's something that you want to always remember. You never want to add to losers, but you want to add to winners. Why? Well, if you're in a losing position, think of it like a relationship, right? This person's not treating you properly and you're not getting what you want out of the relationship. Are you really going to put in extra time to be treated poorly? Right? No. But if someone's treating you well, you're willing to give them more to get more in return. Right? So, and day trades are like one night stands, right? You don't want, you're not married to it. You're just, it's going to be quick, get the action and go. But if it's not working, just walk away, right? You're not feeling it. Hey, get away. Stay away from that one. There's another one, right? There's always opportunities in the market. And so with a swing trade, you're a little bit like, that's more like a long-term relationship. You gotta work around the moving averages, the price action, everything like that. And then slowly but surely, all right, well, maybe it goes up a little bit. It'll be like a relationship. It might go up a little bit and then it pulls back. It's not so fun, but then it goes back up again, you know, and as long as it's 2 steps forward, 1 step back, it's when it finally breaks that trend. Maybe we have a trend line right here. And hey, you know what? You're not giving me what I want anymore. Bye-bye. See you later. So with a winning trade, right? Now, maybe, for example, like this, maybe it comes down and then it tests this trend line again and it rejects it. This is your lower risk entry to the short side. Do you guys see that?
Yeah.
All right. You like my little relationship analogy?
All
right. So triple bottom. This is where there's a lot of indecision, right? We were looking at this. Weren't we looking at this on AMD? I pulled it up today. Or maybe it was Intel.
I think it was AMD.
I'm trying to think. AMD had some today. Here, let's look at it. Well, we'll talk about it first, and then we'll look and see which one it was. Maybe it was even Microsoft. No. Pfizer. I'm looking really quickly to see. No, it's Intel. It's Intel. So we'll look at Intel. All right. So we have the downward trend. A support is set. The buyers are ready. All right, we're jumping on board here. Well, it goes up. And again, this could be 5 minutes. This could be 1 day. This could be weekly. This could be an entire year that we see this. And the range might be 50 points. Or it could be a 5-minute chart and it's 50 cents. So it's not set up to any particular price for the pattern. It's just recognition. And it comes down. We have the buyers down here. Then the sellers come in. They're coming in up here. They bring it back down. Nope, the buyers still want to buy more. And nope, the sellers still want to sell more. Then finally, the buyers come in. Now, sometimes this will also happen when you have a really big whale or hedge fund that's trying to buy a lot. And they will be buying down here, and then they'll put in like a fake sell order to scare people to get out of their position. And maybe they'll lower their sell order. I'm sure you guys have seen it on the level 2, where it starts to drop down and drop down and drop down. And then all of a sudden it might stall there. You might actually see the price almost dance where you're on the time and sales. If you've ever watched NASDAQ stocks as well, you'll be able to see the algorithms almost messing with it. And it's more refreshing where it will be, 21, 20, 21, 23, 24, 25, 26, comes back to 20. And it keeps coming back. And they're manipulating that price to go ahead and fill their order. And it's not really fair, but it happens. And once you can train your eyes to see it, then you know that there's going to be a big move coming. And you know that even if it's on the bid, there's no guarantee that it's going to go up. Sometimes they're selling on the bid. So you have to watch that price action, see where the break comes. And once it breaks, it will usually be, you've got this sort of price action, and then all of a sudden, boom, it will skyrocket up. And it's like, where did that come from? Well, they were done. They started moving it. They pulled their, maybe they have their buy over here for 100 shares, those little iceberg orders, right? And they might have 15,000 that they want to sell. And sometimes that 15,000 is simply to plant fear into people to sell them over here on the bid. They're like, oh my goodness, well, I'm not going to get filled. So I need to drop my price because I see there's a big seller here. So I need to drop my price to get out. And then once they're done, bye-bye, and it shoots up. Got it? All right, so the triple bottom, obviously, it's going to be a breakout when we break the midline right here. It might also be a W, which we'll talk about as well. And we also have the head and shoulders, classic pattern, right? For potential short. So we see the left shoulder, the buyers bring it up, sellers take it down. Again, maybe this is a round number, pivot point, and that's our support. Okay, well, the buyers bring it up again. This is sort of like a little blow off. These are where those shorts had their stop, right? The shorts had their stop right here. And then we have the momentum buyers that are waiting for confirmation. But it might be a candlestick with a big wick on it, or it comes right up and then it reverses right back down again. And it drops down to the neckline right here, comes back up, tests that initial high. Sometimes the head and shoulders could be on an angle like this as well for the price action. Then this is your entry point for the short right here. All right, and that would be the breakout and the trend reversal. So it's not always completely horizontal. It could be the other way for an inverse head and shoulders. So
upside down is opposite.
Sorry?
So if it's upside down, it's opposite.
Yeah, it's inverse. I'll show you one. We have one. I have a chart to look at. But it can be like an awkward head and shoulders, off center a little bit. And you think about it, that makes sense, because on the upward motion, you're going to have a trend line that's up, right? So if we see this head and shoulders motion, hey, guess what? Now it's coming back down. So it's also kind of like this with a channel where we have that upward high and then it comes back down, and vice versa to the downside right here. All right, so inverse head and shoulders would be bullish. Same scenario, the buyers are stepping in, and you'll see this happen as well. This literally could be 10 o'clock in the morning, 10:30, 11. And this is simply, hey, the longs that were here set their stop just below. The longs got taken out by their stop that they had over here. And the shorts thought, yes, I'm going to jump in. and maybe we have our target down here. Guess what? The target hits. Hopefully we take profit, and then it reverses.
Hey, does AMD have one of those right now?
Let's look at it.
on the 5 minute?
Let's look at it. Microsoft just broke above something. Are you long AMD?
Yeah, right now.
Nice. Okay, so this is more, yeah, like a triple bottom right here. You see it?
Yeah.
Definitely see it burning cliff.
That's crazy.
All right,
Right?
so if you're long, I'm gonna give you something else to look at. Hold on, let me see if I can add my indicators back. Let me just go up here and let's do this and let's do this, because you need to know where you're getting out. Do you already have a target for getting out? Do you have a target for getting out?
No, it's see, we got an option. We got options on it, and it's kind of down right now, but we hoping for it to reverse.
Okay. Let's check something else. That's not what I wanted. I want to give me the login. This one. There we go. Let's see if we have any big prints today. $78 and $77.88. This is obviously a short, and 78. So 78 looks pretty strong. We're above that right now, right? So 78. You guys see right here, we have this red line. I'm going to teach you all about these targets. This is a Camarilla, but we'll do it more when we do our charting. And as long as it holds right here, next target is roughly 79.97. As long as it can break 79, 79.50, you see how those also held as resistance and support over here. So we have 79, 79.50 right here, and then 79.97. So what is the strike on the option?
One of them for 86.
Okay. And the expiration?
One of them for $86, and the expiration is Friday, and one of them's for 90, and the expiration is November 6th.
Okay, so the next Friday. Yeah. Always good to actually have something like this, a little desk calendar. So you can see right away, you can see the expirations. So you'll know as well. It's good to have it right next to you. So something else to remember with earnings. So AMD just had earnings. Implied volatility goes up, the price of the options go up right at the time of earnings. So the day after, like if you buy it that morning, for example, today, say you bought it, you might have bought it even right here, right where the price action's above it right now, but you bought it right here. You would likely still be at a loss because the volatility for the option decreases so much from the morning of the earnings announcement even to that afternoon. The price will automatically decline even if the price of the stock goes up. And so it can be very tough if you're trading the same week as earnings to make profit in, for this example, if it was going either way, long or short, because of the volatility, the implied volatility. You can still make money, don't get me wrong. You can still make money, but it would be something like a quicker trade from here to here. If you're holding on to it all day, the premium just decays away and it's harder. Does that make sense?
Yeah.
So the one for next week will likely perform better than the one for this week based on that reasoning. All right, so yeah, it has the triple bottom right here on AMD, but not so much the inverse head and shoulders, because when we look at it, let's zoom it in. When we come back here, I'll get rid of the drawing. We have pretty much the same support down here at 77.80, right? We had this one wick, but we didn't really have the setup where it went like this. Right?
Oh, yeah. You're right.
You see what I mean? So
Yeah.
it was more that it's a triple bottom, but good eyes, good eyes. All right. So the one that does have a triple bottom is, inverse head and shoulders is Apple. And this is on the daily chart. So we have a shoulder here, head, shoulder. Here's our line. And what happened? Yep, we broke out. Now we have, this is our current situation that we're in, where we have a descending trend right here, but it found support along this support trend line, right? So you want to see that you set one low, you set a lower low, and then you come back and you retest it. And then it will continue usually to the upside. So these are ones that you really want to see, the inverse head and shoulders, because that means usually it's going to really squeeze the shorts that all got sucked into it. And the head and shoulders, I find, are better on a day trading basis. Also because I like to short more on a day trading basis than swing trade, based on risk management, right? If you're holding it overnight, something comes out, you happen to be in a pharmaceutical company and it shoots to the moon, oh no. So it limits your risk, or same thing, buying puts, right? Because puts, you're limiting your risk at the same time. All right. So we also have the symmetrical triangles, where it has pretty much the same height, and it starts the trend down here, up here as well. We come down, same scenario. It's always a story. It's the charts and the graphs are simply taking the data and putting it into a visual manner. And it will show us again who's winning, the tug of war, the buyers or the sellers. And the breakout, when we have, much like a cup and handle, where we can measure the breakout and measure the potential move, we can do that for a symmetrical triangle as well. So we measure the height from the top here down, and we add that, we'll call this 2 points. And then we add it up here to the breakout, and that is our next target, the 2 points. Vice versa. Maybe it's 2 points to the downside, and we have the breakdown. So our next target is down here, 2 points down from there. Good. Are you watching AMD? Here, I'm going to put it up here. I'm going to watch it for you too on my other screen. Oh, nice.
Yeah.
Right now, I also see it's hitting point of control. So let's pull it up really quickly. Are you on TradingView?
I'm on Thinkorswim right now.
Okay. I don't know if they have this, but
I got TradingView too though.
okay. The volume session, when I look at it on a 15-minute chart, it's hitting these. Oh, it's right here. It's red. Let me change it. Settings. I like it as a yellow line. That's why I wasn't seeing it. Cancel. Let's go here. Settings. Oh, that's not what I want. So this is our point of control. This is where the most volume has been traded for the day. Right here, it's 79.20. So it might reject off of there. If it rejects off of there, there's a good chance that it will head down lower into the close.
All right.
And this might be that these are the shorts, right? Just that have shorted all day. They felt that breakout of this resistance line. They started to cover, and the longs, the day traders, are trading that end of day momentum. Maybe they're getting margin calls, and they're starting to close out their positions. Again, we're in the last 15 minutes. So we want to see where it goes from here. Is it going to continue up? If it continues up and we can close above 80.40, there's a good chance that it will continue up with momentum going into Monday. However, this is earnings. Day one of earnings, it's down, it's red. Day two, many times institutional sellers. Day three, sometimes when we find a support where there's more buyers, there's newer institutions coming in and buying off of that support, such as, let's see, Intel today. Intel seems to have found, you see, here we have, let me turn these off. Your eyes probably aren't used to it. Here was day one of earnings, day two of earnings, the point of control. Day three, we're down at the bottom, and this tends to be, it looks like it's at the bottom of the day for today, and we're starting to close above it. So this is where the most volume was traded today. Potentially buyers that came in roughly at 45.50. See if we have any prints. 45.60. That's today. Intermarket sweep, 175,000 at 45.78. These are the opens. We don't pay attention to them. So 45.78, you can see right here, it tested and it sold off right here. You can see all the selling wicks, right? So they were selling earlier right here at 45.78 because it stalled there for these are 15 minutes, 15, 30, 45, an hour. Potentially here they sold again, hour and 15 minutes, hour and 30, hour 45 minutes. All right, go back to AMD for you. See how it's rejecting that point of control?
Yeah.
Why did they
I can barely hear you. What'd you say?
Why did they put their earnings out before the bell? Like, why did they do that? What's the
Why
reason?
Why do they do what?
Like, put their earnings out before the bell. It was supposed to be like today, like they have a call for like after the market or whatever.
Right. Sometimes they will have a leak that somebody leaks it beforehand. There's always people that know something beforehand, and it does get out. There is insider trading all the time, unfortunately. But we'll see if we close. This is a really big point to watch, 79.20. If we close above 79.20, maybe it'll go up. But there's no guarantees right now. We are below the past 3 days. So on the daily chart as well, we were in a downward trend. They took it up and now they've dropped it. It tested the support down here, also over here. So this is where it just comes from reading the chart, right? We had this area of consolidation that was quite a while. Let's turn off. I turned off all my indicators just to show you guys the charts for the patterns. So we have, of course, higher than normal volume. Where was the highest volume? Right here. And look at how it rejected it as well, right over here. So seeing all this volume, yes, they took it up. It hit a resistance point. We almost, if we want to look at it like this too, from this area right here, let me get rid of these lines. Do you guys see we have a bit of a wedge, right? So we have the upward bound of this trend line and the wedge right here. It bounced off of here, so it's on watch. Will it do this? Test, 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 boom. It's setting up as a downward trend right now. So there's no guarantee that it will be up here at $86. In fact, if we draw a line right over here, right, 86.20 looks as pretty much a resistance from back here. Found support here at 82 or $83. Came up, tested it first, test up here almost at 86.20. Then we came down to the $83 mark, and it bounced up a little bit back up to the trend line. So pretty much that descending triangle, which is coming up. Rounded bottom. All right. So it's, we got a couple more slides. But it's setting up. It had another descending triangle here, right? You guys see it, since we're talking about patterns, that it came down, bounced up here. Oh, the buyers were still in control, took it up just a little bit. Nope, sellers took over, broke it down. New support was found right here at 79. They took it up. We have a new triangle down here, took it up, had an up thrust candle here. The buyers sold it off, right? We were talking about that it's more of a doji, right? Because we have the long-legged doji, and then this is more of a bearish, right? We have a doji, and now we have a red day after. So it's more of a bearish pattern, and then holding into earnings is risky. So there's no guarantee. They might be taking it down to buy off of this area back here that was a large consolidation point, or it could end up opening up tomorrow and we're down here at 74. So we'll see. All right, let's get back to the patterns because we got 4 more slides. All right, so we have the rounded bottom, and this over a longer time frame can be a very good bullish indication, because they bring it down right here, they bounce up, new low, and then it bounces, but it never sets that low that's lower. And we set a new high, and then it comes back, and then it shoots back up, and we test this rim sort of a cup. And then once we get there, the breakout is nice and spectacular. Let me show you on Kroger had this. Hold on, I gotta go back. So Kroger had this on a weekly chart. Back here, right? No, it wasn't that far back. Sorry, guys. I see an upside down head and shoulders. Do you guys see it now?
Yeah.
That's pretty, right? You start to see the patterns. It's like, oh, okay, upside down head and shoulders. It was a daily, and it was right back here in September of, it was back here that we had the rounded bottom. Right back here last year. And let's do this and move this up. Oops. You see this? Massive dark pool prints. We had the rounded bottom, the dark pool prints. They came back, they tested the print level, and then finished, broke out from the rim, and look at where we are now. From 24 up to 36, it gained 50%. Right? So the patterns will tell you a lot. And we'll go forward with the flag continuation. So this is much like the handle on the cup, right? We have that downward channel. The difference between the flag continuation and the pennant is the pennant tends to be more of a triangle than a channel to the downside. So it's a tight consolidation of a downward channel, and then we have the breakout and it moves to the upside. and it's that confirmation. So it tends to be a trend. It could be on the daily. It could be, we actually saw this on the SPY when we had the pullback. We were in a downward channel, then all of a sudden we broke that downward channel. Right here, we also had major dark pool prints where they were buying, and up it went, and now it gained 35% from where it broke out. And we have the double top. So the double top, kind of like a Head and Shoulders, where we do set those two highs. Let's see, I'm watching AMD up here, 42. So it rejected, huh? It rejected the point of control. All right. So we have the upward trend, comes back, sets a low. Buyers take over. However, they're not able to break out above that resistance point. We have the breakdown right here from that midline. It's also known as a M pattern. And the M patterns will be bearish and the W patterns will be bullish. So the falling wedge, very much like a pennant coming down. It's usually over 10 to 50 trading periods. So this is more on a longer term time frame. This would be something that you would see all day. Whereas the pennant or the bull flag is something you'll see on a shorter time frame. You might only see that on 3 or 4 candlesticks. This is going to be a longer time frame. Many times when you have a longer trend like this, or a larger time frame that you're looking at, you will tend to have a larger move off of it as well. All right, so that is it for these slides. Let's go back over and check out AMD for you. All right. So over here, put on a 5-minute chart. So right now, it really looks like, well, we're in an upward, it broke above here in the shorter time frame. We broke out. This is simply people getting out. End of day, they're closing out their position. And it has a buying wick. It bounced off of the support down here. Oh, ACB just broke down. Cannabis stocks might be dropping down now. Let's check really quickly. CGC. Not so bad today. Okay, ACB. ACB. Here we go. Let's look at the settings. 490,000 share print, and we're below it. ACB is going down. All right, so AMD. With this downward trend and all this pressure, this day it looked like it was going to be having a nice move to the upside and then breaking right back down into the trend, down below the trend. That would have been my get out point once it broke below and couldn't set a higher high here, personally. All right, do you have any questions on the patterns? I know you're watching it. You're intent on what's happening. Did they release announcements?
I thought they were supposed to really release their real earnings. Supposed to be after hours. I don't know what's going on with AMD right now.
Oh, hold on. I didn't mean to get into that. Well, it's always quite volatile the day before. And you know, you can also listen to the calls as well.
Yeah, we do on some of them.
So let's see here. So they announced October 27th, diluted earnings per share was 41 cents. And it's actually better than the estimate of 35, but the forward guidance might be, sorry?
Yeah, bad forward guidance.
Yeah, they might say, you know what, we've had a lot of sales, but we don't foresee that we're going to have more sales, or we might be slowing down in production because there's a problem getting all of the components for everything. I don't know. That's why earnings can be very tough, because, and you don't necessarily want to hold on earnings, but the fact that it's up as well, it's that where are they going from here, right? This is Intel. Let's look at AMD again, see if we got any big prints on it. I mean, there's some things that I see that might be promising. Hold on, let me look over here. Yeah, I think, in my opinion, looking at some things, I think it might be going up tomorrow, based on what I'm seeing. 200,000, that was this morning at 81.85. That was the big print. So we have 78. So this is actually bigger. So if you look at these prints as well for today, let's do this. Right, and let's sort it by this. So the lowest, we have a lot of volume that came in between 130 and 230, which is 211, 145, 356, 570, 875. So I have 875,000 that was traded in the dark pool between 77.88 and 78. So 77.88, right down here. You see also how on the 5-minute chart, 77.88, you see how it stalled right there?
Yeah.
And so why did it stall? Well, now you see that there was that big print behind that price action. That's the reason why it stopped there, because there was a lot of buyers that were taking it, that were buying it right there. And the other one, 78, 78, 78.01, 79.11. So 79.11 is up here. What's the time on that one? 10:30. So 79.11, we set this settings. So those are really the two bounds for today, but there was more that was down here than we saw up there, because the 79.11, there was 79.20. Okay, so we add this up, ignore these two, 300, 400, so 438,000, and we had 800 at the bottom. So it happens to be at the absolute bottom of the day. Where are we right now in relation to that, those prints?
Higher than that, right? So that could be a good thing. Those could have been buying prints, hopefully.
So those calls also, in combination with what I can somewhat see from here, from other things that I see, knowing that we have more that bought at the bottom than up here, even if those were short, there's still 400,000 more from the bottom price.
I think it's gonna work out.
All right. We will see. We'll see what happens after hours though too. But for now, it was in a downward trend. Maybe tomorrow we're going to break out here. We open up above 80. Let's go on the 45-minute chart over here. We go, and really if we're up above 82, you're golden.
82? Okay. Good.
82 likely. If we open up above 82, here's something else. Do you have the ARCA data on, TradingView? Or do you see this wick on Thinkorswim or on TradingView?
Do I see what?
Do you see the wick? You see where it says 86.44?
Uh-huh.
On my screen, do you see that on your chart? Not mine that I'm sharing, but on your own version of TradingView? Or do you see that on Thinkorswim? Because not every chart has this data. That's why I'm asking you.
No.
Okay. It might be worth paying $2 to TradingView to get the data, because sometimes this is a signal of where they want to take it. They might take it down to $76 down here, which would put it right in the middle over here. So we have 75.90 and we also have 86.44. So these are sometimes targets where they might want to take it.
Okay. All right.
So if you were to add ARCA data for $2 a month on TradingView, you would likely get these spikes.
Well, I got TradingView. I got the I think I got like the premium model, but
Okay.
it's something that you just add.
Yeah, you just
premium.
Yeah, you go here. I'll show you. So you go to more pricing. No, that's not what I want. Sorry. I want to go to my profile. I think it's under account and billing. Yeah. Okay. See my data that I have? ARCA. Do you see it right here?
Yep.
So the ARCA, I believe it's the ARCA that gives you that, because the ARCA is more like a dark pool, whereas OTC, that's just your OTC exchange, NASDAQ, and New York Stock Exchange. But if you add this, then you're able to get these wicks.
Okay.
All right, so it's under your profile, your profile, account, and billing brings you to this screen. And then you have your regular plan and then the extra data subscription. So you just go to add extra market data.
All right.
All right. So if you add that on, then you should be able to see that wick. And there's a chance that it could go up to 86. Now in the time frame, I don't know. Let's see. Sometimes I'll show you too on, not on Tesla. Sometimes we see it like right here with the SPY. So it's not always that it's going to go up there. Do you see it right here? That extra wick.
Yeah, I see it.
And meanwhile, it was really trading right around here. All of a sudden we get a wick.
When was that?
What? This is the SPY.
Yesterday?
No, this was on the 26th. So this was Monday.
Okay. Maybe it still will go there.
Oh yeah, for sure. I mean, I'm more bullish, but let's go and see where there's other things going on. This one, maybe this is gonna, we'll see. If we have potentially I'm just gonna stop the recording. No, that's not what I meant to do. How can I do that? Over here?